All right, I think it's time for some contrarian trades. I've noted this in some of my recent videos. Traders have just become way too comfortable with the idea that energy is a one-way trade and it only goes up. They've also become, as they always do at every one of these intermediate cycle lows, they've become convinced that stocks have started a bear market, and I don't think that they have. We do have a pattern that might be forming in stocks that could be concerning, but it's a pattern that takes many months and even as much as a year to year and a half to unfold. So again, you can I covered that in detail in the weekend report. So if you want to, you could sign up for the premium newsletter and read that analysis. I'm not going to cover that in this video, but I am going to float the idea that it may be time for some contrarian positions in commodities. Everybody, like I said, has become convinced that energy is only going up and that the war in Ukraine is going to, guarantee that oil is going to go higher. And here we have I'm just going to illustrate this with a chart of the CRB, which kind of takes all of the commodities into account. So this was our last 3-year cycle right here. And you can see this 3-year cycle, not only was it left translated, but it was not strong enough to, obviously it did not make a higher high. This was the 3-year cycle before that. Here was the top, and then the one before that, you can see the top here. And so, we did not make we weren't even close to making a higher 3-year cycle high. And in fact, the CRB stalled out at this crash pivot back in 2009. That it briefly poked above it for a day or two, and then it gave up those gains, and then started the left translation of the cycle, which ended up with that big crash in 2020, and oil went negative, which, as I've said many times in the past, is the bell ringing that the bear market in commodities is over. And now that pattern has reversed, and you can see this has been a very strong move out of this 3-year cycle low. It has made a higher high. It broke through this resistance. It made a higher high above the previous 3-year cycle high. So little doubt at all in my mind that we are in another long-term secular bull market in commodities. Now, that being said, everybody is way too bullish on commodities, and we are now at another major resistance zone. This is the 3-year cycle low from 2 cycles back. So a major resistance zone. Doubt that the CRB is going to go through this. Maybe at all, and if it does, I don't think it'll be sustained. I think it would just be a very quick little move above that to convince everyone that we got to break out, and then the retail traders and hedge funds that try and buy that breakout will get fleeced as the big banks and smart money sell their positions to them. So I don't think we're going to get a sustained move through this, despite what appears to be very bullish fundamentals with the ongoing war in Ukraine. And again, let me stress that I don't think the bull market is over, but I think we've reached a point where sentiment is just too wildly bullish. People have just had this easy for a long time, and now it's going to be time for some difficult trading. And usually, the more extreme the move to the upside, the longer or deeper the corrective move has to be. So we probably, the CRB either probably needs to come all the way back down and test this breakout here, or as we've seen with gold, it may have to go sideways for a lot of months before we can work off this extreme move and then be set up for the next leg higher. And then at some point here, we're going to be due for that next 3-year cycle low, which is the timing band for that is going to be early 23 to mid 23. So once we get kind of late in this in the year here, then we're going to be looking at potentially a top for the CRB and then a move down into that 3-year cycle low. So it is entirely possible that we could form the top of this 3-year cycle right here. So I think you want to be cautious with commodities right now, and probably you want to focus more on stocks that are completing their intermediate and yearly cycle low right now. That is where the potential is at right now, I think. And if the commodities do take a breather for several weeks or months, it's going to ease inflation pressures, and that would be supportive for a stock market rally as well. All right, so I'll have a lot more in-depth analysis in the weekend report that's going to be out for subscribers here in just a few minutes.